70 feet thick. And so by then we had assigned a team kind of to work on this, to begin to try to pull this work together faster. And you know, we went, good thing about Southwestern, we're small and nimble, and data information goes up and down the hierarchy, because we only have about 3 levels at that time. And so I became aware of this pretty quickly, that there was this incongruity. This is what my science is. It's what my entrepreneurship is. It's when I see incongruities or unexpected occurrences, I get excited because I want to follow through. And so we had a meeting about this up in Fayetteville, and the fellow who worked directly for me, I remember his question that day when he said, because the guys who were working on it initially said, well, this probably isn't big enough to be anything because the shale is thin. It's only 50 feet. Not enough to make enough volume, to where this would work. And so Richard Lane, who, by the way, is a University of Houston graduate in geology. Richard Lane was our chief operating officer at the time. I remember when Richard says to the team, well, what happens laterally, away from right here to this shale? Because geologically, we really don't know. And they said, well, it's probably 50 feet thick. And Richard said, well, probably isn't good enough. Is there any data? If you went, 80 miles or 50 miles away from here, is there a chance that, geologically, that shale that was deposited 250 million years ago might possibly have been thicker? And they said, well, we don't think so. And Richard said, well, I don't care. I want you to go and see if there have been any wells drilled on out there and get some data points. And there had been some wells drilled in the 1970s by Texaco. Big super majors, supposed to know everything, got all the brain power and all that back then. And so we had well data. We had a few wells they had drilled out there where there was no production at all in Arkansas. They had drilled for deeper zones, drilled through this, so when we could look on the logs. A log is an electronic thing you record that gives you kind of some indication about what's down there. And we could see the thickness, and guess what? The thickness out there, about 40 miles away from where we were working, was 250 feet to 500 feet in thickness. I got excited, because this could be big. Now, mind you, at the time, we were quite a small company, probably a market value of, I don't know, maybe $750 million was our market cap, something like that, I would guess. I don't know, it might have been might have been 500 million. And we didn't have a lot of money, but we had enough to go to work and do another 8 or 9 months worth of technical work on this to try to understand what might be present here. And then we took one of the big risks of our time, which was we began to go out and take leases, obtain the rights to drill on people's land. And one of the greatest coups in the energy business today was we managed to do that quietly without any other company finding out that we were carrying on getting these leases. And that's a whole other story about how we did that. We bought title companies, we had people from out of state cooped up in little motels in Arkansas. We did a lot of mysterious things that probably were firsts in our industry. And so we had 2 years of leasing activity. By the time we finished, so we didn't finish, we had by mid-year of 2004 leased about 450,000 acres. We had risked $23 million in paying bonuses to landowners for the rights to drill. We still didn't know if this was going to work by any means. And then in mid-year of 2004, we drilled our first well, a vertical well. And we produced gas, we drilled a number of wells. The first year and a half was pretty marginal. We worked hard to try to figure out how to get more gas per dollar that we were investing, which meant drilling horizontal wells. We drilled down and we found that if we could make the turn and drill laterally, we could contact more of the rock. And so we entered what I call the process-driven part of innovation. It was not like an overnight success. We had to work at improving the process in order to get it where we could make money at doing this. Today we have some 850,000 net acres. That roughly is, in terms you would understand, is like 1,300 square miles. We've drilled to date now maybe 1,000 wells in it. There are probably 10,000 wells to be drilled in this play, and it's one of the great resource plays that the country has ever had, and really then set off as Priest said, set off the rush towards identifying these kinds of plays, these kinds of resources and rocks now in East Texas, in South Texas, in Pennsylvania, New York, across the country. And now you see the international companies, or companies who have had their entire focus, as ExxonMobil has, on exploration in international places. You now see them coming into the game by buying XTO to get a position in the U.S. to try to be involved in this kind of activity. And as well as other national-owned oil companies from around the world who are making investments here in these plays in the U.S. to try to learn, because every hydrocarbon basin in the world has source rocks, which are the shales, and has the potential for natural gas production. And end result here in America is we now we have generations worth of natural gas that we now know will be available at much more reasonable prices, which is a darn good thing for the country, and in many, many ways, if we can begin to make progress with policymakers and seeing the need to make natural gas a centerfold of our energy plan. So that about innovation. The one I didn't say and relate to the Fayetteville Shale is the paradigm shifts. None of this would have happened, none of it would have happened had we not had gas prices get so high in 2000, 2001. And they got high because supply-demand was tight. The prices went up, which allowed us in our industry then, we were incentivized, encouraged by high prices to go and begin to try to experiment in these kinds of rocks. And so that is a paradigm, that is like a demographic change. That's a paradigm shift, was that prices were so high, and that created opportunity, innovation. And so those four things really are a part, they are the story of Southwestern Energy being where it is today, and now with a market value of about $14 or $15 billion. And that all happened really since 2002. And that all began in one person's mind, which is the subject of everything you guys want to talk about, and that is human, it is the human factor. Because this was not done by technology. And we here, I personally, we have a lot of great technologies in our business, but the reality is that the human factor, the human mind, which is the competitive advantage of this country, is really what drives all these innovations. Long answer, but I hope it...
Okay, our next question, you spoke a lot, of course, about innovation, but there's another thing is curiosity that you speak about. One of the main factors of Southwestern Energy's formula is the right people, people with curiosity who are innovative, creative, and hardworking. So how does curiosity play a role in your life and in your work?
Well, I think it's kind of back to the innovation, but I don't understand curiosity. We've had some discussions about it. I don't really understand curiosity. I think I know it when I see it, but I guess I could read the description out of the dictionary, but I don't understand what makes it happen. So, somebody has probably done a lot of research on it. Maybe I should research that one so that I understand it. But usually in a discussion with a person in about 15 minutes, I know whether they're a Southwestern Energy person or not. I can tell you that my discussions I had with some of the students here that are in the energy program, there are a number of those people who would fit in Southwestern Energy. And because I see curiosity there. And you know, if you don't follow up on things and you just accept things as they are, you will never make any progress. And I was touched by a lunch I had with Christina and Francesca about 3 or 4 or 5 months ago. And I knew Christina for some time. I didn't know Francesca at all. I just knew she was Italian, talking fast and waving her hands at our lunch that we had. And I was trying to find out a little bit about her, and I said, well, you know, so what are you doing here? She's moved here from somewhere in northern Italy, right, with her husband. And you know, they had come here to work and then went home, and then she's back, and she's all excited. And I'm thinking, why in the hell are you here? Because most of the people I know want to go spend some time in Italy, in the north of Italy. And we go over there and get a place, and we go drink wine, and we go around, and you know, name me an American who doesn't want to go to Italy. And here she's here in Houston, where it's hot and humid. How's that happen? And so I kept pressing. It was my curiosity. I was pressing on that, and she said, my husband and I are here because in Italy everything stays the same, and in Europe in general everything stays the same. People don't seem to have a hope that they can change anything. They don't have a. And I said, well, what do you mean by that? And she said, well, it's kind of like this. You have a conversation with somebody and this isn't working right, and so you would say, well, why don't we do this? And they say, because that's the way it is. Is that something like that? Because it's the way it is. We can't question it. It's just the way it is. Why is that? You know, I've been wondering about that. Is it because that society and that culture is so old that people have become frustrated in trying to make change? Why is that there? But we know that the American innovation, that America's innovation and spirit and freedom and opportunity is what draws people from all over the world, is to come here and to be a part of what's going on here. And is it because some system locks you in place? And we know that we outcompete Europe, for sure. We know that in everything we do. You know, I don't know if it's in the genes of the people who are here and that come here to this country. I don't know how to define it entirely, but I know it when I see it. I know curiosity when I see it. And I know that curiosity is at the heart of innovation, and it's at the heart of progress. Because if you don't question the way things are, and if you don't search for better ways of doing things, or if Philip Shelby had not said, there is something here that's not fitting, which he pursued, if he just said, well, that's just the way it is. These wells did what they did. I must have been wrong in my calculations. If he had not pushed, so Philip has that curiosity. And that's what drives discovery and new technology. And those things are going to drive our world. They're going to drive this country's competitiveness in the global markets. And we're either going to be successful or not by how good we do at that.
I was just wondering if you could talk a little bit about your formula for success at Southwestern Energy. I think maybe other people are curious about it.
Yeah, well, you know, yeah, this is an explanation of it, but let me tell you about the genesis of it and how that came about and what it means to me and a lot of other people now. Back in 1998, I joined this company in 97, and in October 98, the company lost a major lawsuit brought by some royalty owners about the price that had been paid on some gas contracts there. And that was from a contract that was written 20 years prior to that. So here I joined the company. I read about that. I asked several of the board members, 3 of them were lawyers, because I didn't want to go to work there if this was going to be a problem, you know, and they said, oh, it's a frivolous lawsuit. The reality is we lost that in October of 98. We lost $109 million judgment, largest judgment of its kind of any judgment in Arkansas up until that point in time, and I think even now. So here I was, the new chief operating officer of a company that was worth $190 million, and we lost a $100 million judgment. Now, how do you think I felt? Plus, I had to begin to try to describe this to shareholders who weren't very doggone happy. And so I learned a lot about the lawsuit, but we appealed the lawsuit to the Supreme Court in the state. So from October of '98 until June 22nd of 2000, that was on appeal. It took the court that long to decide. And by the way, we lost on June 22nd of 2000. But in the interim, I had become the president and CEO of the company, and I was faced with going out in the world to all the major cities in this country, and at the time we weren't going to Europe because no one would have cared. But no one cared anyway. You know, when I would go and sit down with investors and analysts, we had one analyst that covered the company, and I think that was because he worked for Stevens' company who wanted to buy us, so they kept, you know, trying to value us. But if you, at that time, our stock price suffered greatly. By today's terms, it was down like to $1.25 a share or something like that. And now it's at 41, right? So, but it was hard for me to go out and talk about the company with any credibility. I could go talk about what I wanted to do, but I pretty much had a deaf ear there in telling the story. So I was sitting in a conference room with the 4 people who worked for me, my direct reports, you would say, and I posed the question to the group as, why shouldn't we just sell the company and go home? Why shouldn't we just sell the assets of this company and leave? Because if you looked at what someone would pay for our oil and gas reserves, it was greater, and minus our debt, was greater than what, you know, our market value was, what our stock price was times the number of shares outstanding. So it was just pretty simple. How in the heck are we going to get any credibility and go forward? And what came back at me was, one of the people who was in that room said, well, Harold, damn it, we've done all the hard things. We have gotten rid of people who are not contributing to this exercise, and by then the management team was all new. I'd brought in people I'd worked with in the past. And he said, so we've done that hard work. You know, it's not fun to fire people. It's not fun to send people home. But we had recruited a core team. And another person said, and Harold, you know, we've focused our efforts in the areas where we have expertise. We have geologists, geophysicists who know the Gulf Coast area. We've sold the Oklahoma properties, and we're focused. And I said, okay, I'm sitting there saying, okay, yeah, that's great. That's what everybody says. Every CEO of a company goes out and says, you know, we've done those things. But that doesn't differentiate us in any way, and it does nothing to give us credibility. And my biggest concern was the incongruity. The market cap was down here. The asset value was here, right? So why shouldn't you just sell the assets, give your shareholders that return, and put yourself out of your misery? That was what kept chewing and eating on me. And I was sitting there in that meeting, and I said, well, and this is innovation, I guess, in a way, is I said, well, to me, what you're saying is we've got the right people and we're doing the right things. But that's not good enough, because that's not a business proposition. That's just a claim. That's like saying, we're the best, right? Well, the shareholders are sitting there saying, but your stock price doesn't say you're the best, and, you know, why don't you do it? And so I was sitting there, and then I picked up one of these marker pens, and we had a marker board, and I got up there and I wrote this formula. I wrote this, not a marketing company. I did it. And I said, what this means is the 2 R's mean the right people doing the right things. And when I first wrote it, I said, supported by the underlying assets will create value. And so we put that on the cover of our annual report in 1999. You can go back and you can see it. You can see my description about how I was thinking about the company. And so we went forward, and I was still embarrassed. It's just my value system, I guess. I was embarrassed by supported by, because I don't want anybody to support me, and I don't want this artificial support, or, you know, that's just not me. I think I got to make my way. And so I got the guts to change the words from supported by the underlying assets to wisely, big word now, wisely investing the cash flow from the underlying assets. Because that's what the enterprise is really about. If you wisely invest the cash flow as you produce whatever oil and gas you do every year, take that and invest it in projects that you can calculate a significant present value added per dollar invested, then you will, over time, create value plus. And so when I said wisely, I really had a gut check on that, because I thought, you know, somebody's going to kill me for going around in Boston and New York and LA and San Francisco and say wisely. What makes you think you're so wise? And how do you judge wisely? Well, we have a numerical answer to that. Rolf, it is defined as present value index equals discounted present value of the future cash flow streams that might come out of a project divided by the present value of the investment. So we have what you learn in finance, right? And so why is that important? And we set a hurdle rate for PVI. We want to invest only in projects that will give us at least a 1.3 PVI, meaning we get the return of capital plus 0.3 or 30 cents of present value. And we use a 10% discount factor because we all know what that means. You should use cost of capital, what have you, but we use 10% to keep it standard. We run flat price decks into the future and so on. But we only invest in projects that give us that incremental present value. And so now it's easy for me to talk. I go to really smart people like you who are now managing $5 billion for some hedge fund, and I say, the PVI, the wisely, is the discipline in our managing and leading this company, because we only invest in projects that give us a 1.3 PVI based on our view of risk and everything else as we model it into the future. And I say that the reason we use PVI and not reserve growth or production growth or anything, we don't use those as objectives and goals. We use the economic parameter, PVI, for this reason, Rolf. If you invest every single dollar you have into the project, it gives you the highest PVI. Mathematically, you cannot disprove, but you can only prove that you will maximize the net present value of the enterprise. And net asset value per share is going to drive the long-term stock price of an enterprise. And so it all fits. And believe me, these people love that story because they can't understand production growth and drilling lots of wells and all that kind of stuff. Now, if you do that well, you will have production growth and reserve growth. But those are outcomes. Those are not goals for us. And how in the heck did I get off on all? And so, you know what happened? I wrote that equation to describe how we overcome the incongruity of today's asset value exceeding the market cap of the company. Because the only way to discuss that argument and that incongruity with an investor who says, sell the assets and go home, the only way to describe it is if the bet he's making as an investor is that we will create far more value by doing this in our enterprise than if we sold the assets today. That's why I wrote the equation. Now today it means something entirely different. You ask a person who works at Southwestern Energy and they say the formula drives everything we do. It means our environmental and community responsibility in areas we work, doing the right things. You know, it's become, to me in the beginning it meant investing in the right projects. To the company today it means every single thing. It means to people, I must be one of the right people or I wouldn't be here. You know, when you feel like you're one of the right people, you feel good about what you do. You know, our job is to create an environment within our enterprise that fosters the generation of ideas. Everything is built on ideas and innovation. People don't innovate when they're getting whipped up on. Well, they might innovate by figuring out how to get the hell out of here. But, you know, what's happened at Southwestern Energy is we are a magnet attracting the top talent now, which sets us up for the long, long term to really be competitive. Because a lot of us are getting old and we're retiring like I did a week and a half ago.
I'm going to go a little broader. What are your thoughts on the current crisis? Does it have any particular cultural or philosophical roots? And how does human capital influence the economy?
Well, the answer to the last part, how does human capital influence the economy? It's everything. You know, I think I've talked a lot about that in terms of innovation and the brain power, motivation of people, and so on. The current crisis, I think it's, when you look at the current crisis, it's simply put that, when you look at the whole big picture, you had politicians who wanted Americans to be happy. They wanted everybody to be able to afford the American dream, which was a house, to have a house, not necessarily afford the house, regardless of whether they could pay for the house. We had people at all levels through that value chain, from the realtor who sold the house to people, to the mortgage broker who, signed up the paper, who handed it off to the consolidators, who took it and sold it, with low credit ratings mixed with high credit ratings, created CDOs, sold those around the world to people, with them rated because they did some economic model that said this can't fail. And you know what? We have a whole system there that got rotten, without the appropriate regulation. But I would also tell you that if anything, it goes to the human factor, which was everybody in that value chain that I mentioned. You just mentioned to me a realtor who was not fat and happy during these days, making tons of money for walking people around houses and selling them houses they shouldn't have been buying. We can put some blame on television. There's a show my wife watches on HGTV that is Flip This House or something.